All right, so we are here off the market, I guess, for my ebook. So we're actually going to go over track 1 today, which is Don't Stop Till You Get Approved. Have a special guest here with me. We go back a pretty long time, right?
Yeah, a little while.
Pretty long time. So we have loan officer for NFM Lending, Ronson Quick.
Yep.
I wish we had some claps, but that's all we got.
Yeah, it works.
So for the people that may not know you, or let's say they don't know anything about you at all,
Yep.
or what you do, can you just break down, I guess, like what's your job title,
Yep.
what do you do, and how do you help both buyers and sellers during the process?
So yeah, I'm a mortgage loan officer. So my job is basically to help somebody get, at the end of the day, approved for a loan to purchase their home. So from a buyer standpoint, it's basically starting the process from a pre-approval, getting them an idea where they're qualified, what's going to work for them, what financing options they have. And even, as you said, even from the seller standpoint, we can kind of help sellers, especially in a situation, obviously they're looking to buy as well and they need financing. We can kind of guide them and give them the best steps to move forward with the process.
Pretty simple, I think, in layman's terms. But all right, so we're just going to go over, track 1, don't stop till you get approved, right? So the whole thing about purchasing a home is you have to get pre-approved,
Yep.
right? So you have to go to a lender, you have to see where you're at, see what's going on. So from a buyer standpoint, what's the first step they should do when they contact you?
Yeah, I mean, just contact me in general. Well, that's the first step, just because everybody kind of starts on Zillow, it seems like, and kind of starts looking at houses.
Absolutely.
Everybody wants to buy $1 million home. That's completely, HGTV house kind of thing. But you really want to talk to a mortgage professional so you know, hey, where are you going to qualify? What are you comfortable with? We can have that conversation with you and just go through like everything that's entailed with the mortgage pre-approval process. Make sure you're looking at something that you're ultimately going to be comfortable with and that you're going to be able to make the monthly payment on, because that's the biggest thing. So
yeah, so something that I get asked a lot, I'm pretty sure you do as well. So once they do get a chance to, get in contact with you, what do they need as far as getting pre-approved? Like what type of things do you guys go over?
Yeah, so it's really just general documents up front. Like if it's somebody that has like pretty consistent like salary income, it's a little bit of an easier process. If it's somebody whose income varies, they're a self-employed person, they have commission, things of that nature, we want to look at documents up front just to confirm everything's accurate with their income based on our conversation. But for the most part, besides that, it's just getting enough information to do a soft credit check in your income documents in order, just knowing what your employment history is and what assets you have to go towards a transaction to kind of start the ball rolling.
All right. And look, this is somebody that's helped out a lot of my buyers as well. So very trusted guy. So the next step we're going to go to is really like another big thing as well, because it's not just income. Is credit. So I get asked a lot of questions about credit.
Sure.
I'm not the credit professional, but I can tell them just some of the basics I know you guys look for. So can you break down, I guess, like the credit scores, what you qualify for? What do you guys look for when it comes to credit?
Yeah, so I mean, there's really 3 things that we're looking at. There would be the 3, I would say, pillars of getting a mortgage, essentially: your credit, your income, and assets. So without the 3 of those, you're really kind of putting yourself in a situation where you're not going to necessarily be able to get pre-approved. But a credit, I would say, is probably the biggest one of them, right? If your credit's not in line, you're really not going to be in a position to purchase a home in a lot of scenarios. So just starting from that standpoint, typically I tell people 620 is going to be like the minimum credit score to allow you to have the best financing options. Now, we do have different products that allow you to go under a 620. In a lot of situations, though, it's going to require you to put more money down for the required down payment to make that situation work, though. So.
All right, so you're not looking for perfection.
We're not looking for perfection. You don't have to have perfect credit to qualify to buy a home, essentially. As long as you're in a situation where we can kind of make sense of it and get you qualified, then yeah, we can do something for you. But yeah, you don't have to have perfect credit to buy a home.
And let's talk about, I guess, the myth, so to speak, of do I have to put 20% down? Because a lot of people, when they come to me, that's what they ask,
Absolutely, yeah.
and that's what they're calculating in their head, and that's a big sum of money to be able to put down. So that scares a lot of people.
Yeah, hearing 20% is it's a deterrent, kind of daunting for a lot of people, right? If you hear that, then it's kind of in the back of your mind, it's going to be hard to purchase a home, right? But that's, as you said, a myth. So if you're a first-time home buyer, you can put as little as 3 to 3.5% down, depending on what program you're looking at. In general, though, the lowest down payment, like if we're looking at a conventional mortgage, is going to be 5%. FHA is 3.5%. So, in short, 20% is not correct as far as what the minimum is for a down payment. You can put less than that, and they'll still purchase a home. So
you actually just led me into like my next question, the type of loans, as far as just the regular. What people are more familiar with.
Sure.
Can you just give us a rundown of that?
Yeah, so I mean, there's all different types of loans. I would say FHA and conventional are going to be the two that are going to be the most used in the market today, right? Yeah. So when it comes to a conventional mortgage, we're really looking for somebody that's going to have like I would say 720 plus credit score. That's going to be where it makes the most sense to go with a conventional mortgage as opposed to an FHA. Conventional is going to be more like risk-based pricing. So the better your credit score, the better the situation is going to be for you. When we start to go under 720, that's when we start to kind of switch to an FHA mortgage. It's going to be minimum 3.5% down, but that's typically going to be for somebody, as I mentioned, that's a little bit of a lower credit score. Obviously, we can still get them qualified in the same type of situation for the most part, but FHA, when you're under 720, is going to be where we're kind of looking. So.
All right, so let's touch on VA as well, because I do have some people that...
Sure, yeah. Salute to the veterans.
Absolutely. Thank you for your service.
Absolutely.
Can you just break down VA and also... Can you use that multiple times? Like how does that work?
So VA is going to be for veterans. Anybody that's served the country that's eligible for VA financing, we can look at that. So the benefit of a VA loan is going to be zero money out of pocket, right? Well, I'm sorry, zero money down. There's not zero out of pocket. That's kind of one of the misconceptions with that loan. So it's zero money down. There are still closing costs associated with that loan, but the benefit is that you don't have to put down the down payment that you have to do with the other programs.
Right. So the other programs may be as low as you said 3.5%, but with the VA, it's as minimum of 0%.
Down. Correct.
Okay.
Yep.
All right. And so who's able to use that as well? So I had a question from a friend of mine that is obviously VA. When someone does get the benefits of the VA, does that go down to like their spouses, or how does that typically work?
Yeah, so if you're looking to do a VA mortgage, it would have to be somebody that, like, it can't be a veteran and like a girlfriend. It would have to be like a veteran and a spouse if you're both looking to be on the mortgage. But yeah, your entitlement can be passed down from from the veteran to their spouse as well.
Okay.
Yep.
All right. Well, look, getting some of these questions answered, man. Some of these questions answered. Yep. Can you break down just some of the different grant programs that people may qualify for or ask about? That's really big with first-time home buyer programs and stuff. So
for New Jersey, there's the New Jersey Housing First-Time Home Buyer Program. So depending on the area that you're looking to purchase in, it's a $10,000 to $15,000 credit that goes towards down payment and closing costs. So yeah, it's basically free money in your pocket. So if you're a first-time home buyer, definitely encourage you to use it, especially if you need the funds to help you with the purchase. So it's something we do every day, close those loans every month, right? Yeah. So it's something we're very familiar with. There's, at times, depending on who you're talking to, there's a little misconception that they're like tougher loans, or that it kind of causes issues with the process. Not the case. We have to allot for a little bit of additional time just because it does have to go to a state for like an approval. But yeah, they're great loans. We do them all the time, and people close with them all the time. So yeah, not an issue there.
That's another misconception as well, where when people come to me, my side of the job is, well, I have a VA or I have a FHA loan, and it's going to be harder to get accepted. And in the case, how long I've been in the business as well, that's really not the case.
Absolutely.
As long as the offer is strong and you do have a good lender, and we make sure everything is good on our end, we're pretty much good to go.
Yep. Absolutely.
So yeah, I haven't run into anything. So I mean, I kind of know the answer to this, but people need to know as well. So what are some of the most common mistakes that buyers make during the pre-approval process that may hurt their chances of possibly closing?
I would just say just talk to the lender as soon as possible, because we can kind of go through everything up front. There's no time that's too early to talk to somebody and kind of get what your options are. Hey, maybe you need to work on your credit and you don't know it, or maybe you can purchase and you just don't realize that you can yet. So just talk to your lender up front. As far as like issues that people run into, I would say continue doing what you're doing. Basically, if like continue making your payments on time. Don't try to open credit before you start the process or during the process, because that's going to be run into issues in the long run.
So that's where I want to get into as well. So have you run across people that lost their pre-approvals, and why? Was it spending habits, acquiring more debt? Just give some examples.
I mean, there can be a litany of things that would cause it. I've had people where they opened up accounts after that brought their score down or changed their debt to income ratio. So ultimately they qualify for one thing, and then they open a new account with a higher payment, and it kind of changes where they qualify, because we're looking at what your monthly payments are. That's going to show up on your credit report. So if you're increasing that, that's going to change what we're looking at as far as where we can get you qualified. And then small things like maybe forgetting to pay like an Old Navy credit card or something like that can hurt your score. So that's something that can at the end of the day hinder where we can get you qualified for, or if you will qualify at all. So,
and please don't make no big purchases.
We don't want to see that.
Don't go out and buy a new car unless it's like cash. Don't put anything on that, and also don't quit your job during this process. That's a major thing.
That's a major thing. And I've run into that scenario before, right? Where somebody's like, hey, I'm not, without telling me, right? I'm going to change my job because I don't want to do that anymore, or something, any reason, right? That's going to change where we can get you qualified. If you're changing stuff up until the day of closing, that can be an issue. So whatever you want to do after the fact, as long as you're paying your bills, you're good. But before closing, we kind of have to keep everything status quo. And if there's changes, then that's going to affect what we're looking at. So
keep everything, like you said, what you're doing already to get to this point. Keep doing it. No major purchases, no opening up accounts, and do not change career paths until you close. Do whatever you want after we close. But up to that point, because that can, hurt your pre-approval.
And if it's something that you are thinking about doing, just talk to your loan officer about it. Make sure we're involved so we can guide you the best that we can and give you the best information. So,
all right. So we're about to wrap up. Just got a few more question and answers for you really quickly. Okay. So we have credit score or income. Which one usually holds buyers back more, you think?
I want to say both, because without both, it's hard to get you qualified. Without having the score that you need, we're not going to be able to get you qualified there. There are some like no doc and no score type programs, but that's not really something that we kind of dive into. It's more of a like non-QM kind of broker kind of thing. So I would say just from like a traditional lending standpoint, you really want to have both in line to be able to put yourself in position to purchase a home.
Okay. What's the best thing a buyer can do right now to prep financially in order to get pre-approved?
I'll stress this all the time. To talk to your lender up front. You never know what your situation is. And the good thing about us and a lot of lenders, we do soft credit checks up front. So like I said, there's no bad time to have the conversation and kind of start looking into purchasing a home, because you never know what you can do. You never know what you may need to do to be in position to do that. So just have that conversation up front as early as possible so you can make sure you're in position to move forward.
Now, can someone still get pre-approved with student loans or self-employment income, like entrepreneurs?
Yeah, absolutely. So you can still get pre-approved with those things. They are counted as debt, so as far as student loans, so we do have to take a look at that when we're qualifying you. But you can still get qualified with student loans. Self-employed as well. We just want to look at what their history is of the last couple of years. We take a look at their tax returns for the last couple of years, so we can kind of advise what's the best financing option. You can look at traditional financing. We have some what's called non-QM or non-qualified mortgage options, where we can take a look at bank statements, profit and loss statements, things of that nature, to kind of get you qualified from that standpoint. So there are options if you're self-employed to get pre-approved.
All right. Well, look, you heard it here first. Ronson Quick, NFM Lending. If you want to give out your information as far as phone number, email, how people can get in contact with you.
Yeah, so phone number 609-969-0187. That's always going to be the best number to reach me on. My emails are quick@nfmlending.com. Nancy, Frank, Mary. You can reach out to me anytime. Happy to help.
And he does respond. Like I said, this is my guy right here. He helps me out a lot. Thank you so much, man.
Absolutely.
I really do appreciate you coming through, dropping some knowledge.
Yep.
And look, you got to start it off. This is track one.
Yeah,
don't stop till you get approved. So I hope this helped out everybody, and look forward to seeing everybody again soon. So
Take
appreciate
care.
you, big guy.
Absolutely.
All right.
Yeah, man.